Bitcoin is volatile again, ETF money is leaving the market, tensions in the Middle East are escalating, and traders are asking one big question right now. Is this crypto preparing for another breakout or the beginning of a larger correction? Now let's break down everything that has happened in these last 24 hours. To kick things off, let's have a little look at Bitcoin. Now over the last 24 hours, Bitcoin traded in extremely volatile ranges between roughly $76,000 and $78,000. Now the market saw a sharp sell-off after Bitcoin briefly lost support near the $77,000 range. Now traders got caught on the wrong side of the move, but despite the volatility, buyers eventually stepped back in and defended the mid $76,000 region. Right now, Bitcoin is trying to stabilize, but traders are very cautious as we are still in a very tight decision zone. And then now the fear and greed index has also moved back toward fear territory, showing that the market sentiment has weakened significantly compared to earlier this month. Now, one of the biggest reasons behind the weakness in ETF outflows is that spot Bitcoin ETFs have reportedly seen billions in net outflows recently, so including several massive withdrawals days over the past week. Now, this is very important, as this demand has been one of the main drivers behind Bitcoin's rally in 2026. So when institutions actually pour money into ETFs, Bitcoin usually gains momentum relatively quick. But when money flows in reverse, the markets lose a major source of buying pressure. Now, whether this is simply profit taking after a strong rally or the start of a broader risk off environment. And now that leads us to some tension. So crypto isn't moving alone right now. Now, a major driver behind the market volatility is the worsening geopolitical situation involving Iran and the broader Middle East. Now, investors are increasingly worried about the escalation around the Strait of Hormuz, one of the most important oil routes in the world. And as tensions increased over these last 2 days, oil prices moved higher and the global markets immediately reacted. Now, we did come to a high of $105 per barrel for light crude oil futures. Now, that will be significantly more on Brent crude oil, as that is what we get that's normally happening. And now you're probably asking, why does this matter for crypto? So higher oil prices can increase inflation globally. And historically, higher interest rates are bad for speculative assets like crypto because liquidity becomes tighter and investors become more defensive. And right now, Bitcoin is being pulled between two competitive narratives. So one side sees Bitcoin as a risky tech asset, whilst the other one sees it as a digital gold asset. Now, Ethereum and the broader altcoin market have also experienced some heavy volatility. So Ethereum managed to hold above the key support zones, but momentum remains weak compared to earlier expectations. So Ethereum right now is in kind of a consolidation phase, and it's still near the support level. So we did see a big drop from that level, but we are in a very nice consolidation, and we may see a move back into that key level sometime soon. Now, altcoins like Solana, XRP, and Dogecoin saw aggressive swings as traders reduced exposure to risk assets. So a lot of speculative capital is clearly leaving the market temporarily while investors wait for more clarity on macro conditions. And that is why we are seeing increased volatility almost everywhere in crypto right now. So what are institutional investors watching right now? So right now we're looking at ETF flows, the Federal Reserve, and oil prices and geopolitical escalation. And now fourth, whether Bitcoin can hold the key support levels. Despite the recent sell-off, the long-term Bitcoin holders still aren't showing any signs of panic. And some on-chain analysts say exchange balances continue falling, which usually suggests accumulation rather than mass selling. So that means that in the long term, conviction may still be intact around $75,000 to $76,000. So if Bitcoin loses this key area decisively, analysts warn we could quickly revisit lower levels. And I'm looking to about a 72k level where we have that major support sat. But on the other hand, if Bitcoin reclaims 80,000 and starts pushing up toward making new highs, sentiment could flip bullish very quickly. So like I said, we are in a very to be determined moment right now. And we will see that unfolding in the next couple of days. So make sure you are subscribed so you don't miss out on the latest. Now, overall, the crypto market right now is being controlled by macroeconomic fear, geopolitical instability, and institutional money flows. Now, short-term volatility remains extremely high, but underneath the fear, institutional adoption continues growing, Bitcoin accumulation is still happening, and the long-term narrative hasn't disappeared. Now, the next few days will be critical for the market, so traders will be watching ETF data, Middle Eastern developments, oil prices, and the Federal Reserve expectations very, very closely. And I suggest you guys do the exact same if you are trading in these volatile markets right now. So crypto is no longer in this isolation. It's trading as part of the global macro story, and Bitcoin remains at the center of the whole thing. Now, I'd like to know what you guys think in the comments below. Do you think Bitcoin is preparing for another breakout, or is this a deeper correction coming first? Now, if you guys are looking for a platform to trade, then I would definitely recommend Evedex. Now, Evedex is a fully decentralized platform you can use for all of your trading. There are very nice challenges on there, so you can win iPhone 17 Pro Max. The top, obviously, 2 terabyte, we're going all out. We can also AirPods, Apple Watch, many interesting things on there. So the link will be in the description below, so make sure you check it out. There are also prize pools for traders who actually trade on the platform. So you could be one of the lucky winners if you stay consistent on the trading. So as always, hit that like button, it will be greatly appreciated. And thank you guys for watching, and I'll see you all in the next one.